We are covering these 6 top big cap stocks with large percentage gains today. While watching bullish price actions, let us inform you. Our review on QMCO Quantum Corporation, a company that helps businesses manage and extract value from unstructured data like video, images, and audio. They offer a range of solutions from high-performance storage for AI applications to durable data lakes for AI models. Their product lineup includes Myriad all-flash storage, StorNext file system, and ActiveScale object storage, along with AI-enabled tools like CatDV for media asset management. Essentially, they're helping businesses tackle the challenges of the AI era by making data more accessible, secure, and actionable. Now, here's the big news. Quantum just launched Quantum Go Refresh for DCT Series, a subscription program designed to protect businesses from ransomware and other cyber threats. This all-in-one offering includes hardware, software, and support with regular hardware refreshes to keep companies up to date. Instead of hefty upfront costs, businesses can opt for quarterly or annual payments, making enterprise-grade data protection more affordable. The program uses on-premises all-flash storage, which is faster and more cost-effective than traditional cloud-based solutions. Plus, Quantum's advanced deduplication technology allows businesses to store up to 70 times more data without extra fees. It's also compatible with major backup software like Veeam, making it easy to integrate. This launch comes as Quantum is already seeing strong demand for its DC data protection appliances. In the fiscal third quarter, they secured major deals, including a multi-million-dollar refresh at a top European retailer and new business with a global tech manufacturer. Their Myriad and ActiveScale products are also driving growth. Myriad recently added in-place scaling and automatic data leveling, making it more flexible for AI workloads, while ActiveScale expanded its Veeam-ready qualifications, offering solutions for ransomware recovery and budget-friendly cold storage. For investors, Quantum is a company to watch. Their focus on AI, unstructured data, and cybersecurity positions them well in growing markets. The launch of Quantum Go Refresh addresses a critical need for businesses to protect their data, and their ongoing innovation with Myriad and ActiveScale shows they're staying ahead of the curve. That said, they operate in a competitive space, and their success will depend on their ability to scale and keep innovating. But with strong demand and a clear focus on solving real-world problems, Quantum has a lot of potential. If you're looking at AI, data storage, or cybersecurity, Quantum Corporation is worth keeping an eye on. Our review on RHLD, Resolute Holdings Management Incorporated. They're an alternative asset management platform with a sharp focus on operational management, things like capital allocation, operational best practices, and M&A. Their main gig right now is managing QMCO Incorporated, a leader in secure payment card technology, through a subsidiary called QMCO Holdings. But Resolute isn't stopping there. They're eyeing future opportunities to manage other businesses, too. Their playbook? The Resolute Operating System, a framework designed to drive long-term value for both the companies they manage and Resolute itself. For investors, the big draw here is their long-term management contract with QMCO Holdings, which locks in steady management fees. But the real potential lies in their ability to scale this model. If they can replicate their success with QMCO across other businesses, it could be a game changer for their growth and stock performance. That said, their future hinges on execution. Can they onboard new companies and deliver on their value creation promises? If they can, Resolute Holdings could be a compelling player in the asset management space. Keep an eye on their expansion and the performance of their managed businesses. Those will be the key indicators of where this stock is headed. Our review on NIPG, Emeren Group Incorporated. This is a Sweden-based holding company incorporated in the Cayman Islands, with its main operations split between Sweden and China. In Sweden, they're known as Ninjas in Pajamas, or NIP, a big name in the esports world where they manage professional gaming teams. Over in China, they operate through Wuhan Xinjiang Weiwu Culture and Sports Development Company Limited, focusing on esports teams, talent management, and event production. And let's not forget, they've got a merchandise line too, selling everything from t-shirts and hoodies to hats and socks. So they're not just about gaming, they're building a lifestyle brand around it. For investors, here's the deal. Esports is booming, and NIP Group is right in the middle of it. Their presence in both Sweden and China gives them access to two major gaming markets, and their talent management and event production in China could be a goldmine given the region's massive audience and sponsorship potential. Plus, their merchandise adds another revenue stream tied directly to their brand's popularity. That said, esports is a fast-moving and competitive industry. Staying on top means constantly adapting to new games and trends. For NIP Group, their ability to scale, attract top talent, and monetize their brand will be critical. If they can keep riding the esports wave, this could be a stock worth watching. Keep an eye on their team performance, merch sales, and expansion in China. Those will be the key indicators of where this is headed. Our review on SOL. Emeren Group Ltd is a renewable energy company that's all about solar power and battery storage, with projects spread across Europe, North America, and Asia. They're not just building solar farms, they're also getting into energy storage, which is a big deal as the world shifts toward cleaner energy. Now, here's where it gets juicy. The shop parties, who already own about 36% of Emeren, just made a move to buy up the rest of the company's shares at $2 each. That's a 68% premium over the stock's closing price back on March 14th, 2025. Basically, they want to take Emeren private, and they're pitching it as a great deal for shareholders, especially those who've been in it for the long haul. For investors, this is a big moment. A 68% premium is a pretty sweet offer, and it shows that the shop parties see a lot of potential in Emeren's future. But here's the thing, it's not a done deal yet. The offer is non-binding, so the board has to weigh its options, and there's always a chance other buyers could jump in or the whole thing could fall apart. Still, this news could shake things up for Emeren stock in the short term. If the deal goes through, it's a win for shareholders. If it doesn't, it might leave people wondering about the company's direction. Either way, Emeren is definitely one to keep an eye on, especially if you're into the renewable energy space. Our review on Richtech Robotics Inc. This is a company that's all about bringing robots into the real world, specifically into places like restaurants, hotels, senior living centers, casinos, and even movie theaters. They design, build, and sell robots that handle tasks like delivering room service, bussing tables, scrubbing floors, and even preparing food and drinks. Basically, they're taking labor-intensive jobs and automating them with advanced robotics. Their lineup includes some pretty cool bots like Atom, Scorpion, Matrody, Medbot, Titan, Skylark, and Dusty Atom, for example, is a food and beverage robot built on the NVIDIA Jetson Orin platform, which is a big deal in the tech world because it's super powerful and efficient. Scorpion shares the same architecture, so it's got that same cutting-edge tech under the hood. Now, for investors, here's why this matters. Richtech is targeting industries that are ripe for automation. Think hospitality, healthcare, and manufacturing. These are sectors where labor costs are high, and there's a growing demand for efficiency. By offering robots that can handle repetitive or physically demanding tasks, Richtech is positioning itself as a key player in the automation revolution. Their focus on autonomous mobile robots, AMRs, is particularly interesting because these bots can navigate complex environments on their own, which makes them super versatile. But Like any company in a fast-evolving tech space, there are risks. Robotics is a competitive field, and Richtech will need to keep innovating to stay ahead. Plus, they'll have to convince businesses to invest in their technology, which can be a tough sell in industries that are traditionally slow to adopt new tech. Still, if they can scale their operations and prove the value of their robots, Richtech could be a major disruptor in the automation space. For investors, keeping an eye on their product pipeline, customer adoption, and partnerships will be key to understanding where the stock is headed. If they can execute their vision, Richtech Robotics might just be a name to watch in the coming years. Our review on MTEN. Mingteng International Corp. Inc. is a company that develops and supplies casting molds for various car parts like turbochargers, braking systems, and steering components. Recently, they've been making moves into the electric vehicle EV market, offering molds for critical parts like motor drives and battery packs. In addition to manufacturing, they provide services such as product design, repair, and machining, mainly within China. The exciting part of Mingteng's business right now is their push into the electric vehicle sector. As EV production ramps up, particularly in China, Mingteng is well-positioned to benefit. The demand for high-quality molds for motor drives and battery systems is increasing, and Mingteng's expertise in these areas puts them in a strong spot to capture that market. With China being the largest EV market globally, their focus on these components could lead to significant revenue growth in the coming years. However, there are some risks to keep in mind. Mingteng is heavily dependent on the Chinese market, and any economic slowdowns, political changes, or shifts in government policy could impact their business. The Chinese market is massive, but it's not without its challenges. Investors should definitely monitor any changes in the economic or political landscape that might affect Mingteng's operations. Overall, Mingteng seems to be in a good position to take advantage of the growing EV industry, and their stock could see solid growth if they continue to capitalize on the shift. However, like with any company, the risks tied to their reliance on China and broader global market conditions are important to keep in mind. Investors should stay informed and watch for developments that could affect their performance. Please subscribe, give the video a like, and watch more from our playlist. Thanks!